Someone has already done and is already doing what you want to do. And no, they didn't fall into a rich family to do so. They were not born lucky. You know you can be more. You can have more, do more, and be more. You know this. You wouldn't be listening otherwise.
What we know about the market turmoil in the US and around the world. It started with this 12+% drop in Japan's Nikkei index, spurred by the unwinding of an investment strategy called the carry trade.
In a carry trade, investors, they're borrowing currency of a country with a really low yielding government debt like Japan. They're selling that currency and buying, in this case, dollars with it.
But on July 31st, the Bank of Japan raised rates to 0.25%, sparking a rally in the yen. And just a few days before, economic data out of the US had put investors on edge.
The Fed meeting Wednesday, the central bank held interest rates steady. And then on Friday, we had this jobs report come out that was a lot worse than pretty much anyone in the market was expecting.
These three events fueled a broader market sell-off that has included the biggest tech stocks, shedding more than $650 billion in market value in one day.
And there you go, ladies and gentlemen. If you were wondering what took place in the past, I don't know, what was it, probably about week or so with the markets going nuts, that's the explanation. That's all you get. I'm joking. We are back with another episode of Key Factors Podcast Real Estate AF. And the AF stands for And Finance. And we're going to continue the discussions on finance. We just had two great back-to-back episodes with some experts in the real estate game discussing the U.S. debt clock, the crisis that we're facing, and how to help you guys kind of interpret at least the basics and overall understanding of how economics works, supply, demand, all that good stuff. So today I've brought along two guests, and I want to dive a bit deeper into the stock market, how things are tied together, a bit of education. So I'm going to introduce my first guest, and he is back from a sabbatical, I'm going to call it. He was actually joined me on my very first podcast episode. It was 2.5 years ago, that was entitled Becoming a Loan Officer in 2021. And without further ado, Preston Jones.
Hey.
Welcome back, dude.
Yeah, man. I'm excited. Very, 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 very excited to be back here over at I Think Mortgage and ready to hit the ground running and get after it again.
Amen to that. Now, Preston, it's probably been a while since the listeners out there have caught you on a podcast. You were on a couple back in the day. Discussing social media, leveraging that. We had a great discussion with Brian Paris about discrimination and if it's real or not, or is it just education or lack thereof. So if you could just take a moment and tell our listeners who you are, how you got in the business, and what your next step is.
Yeah, definitely. I mean, my name's Preston Jones. I've been in the business for coming up on my 4th year, I believe. The more I say that, I feel like I'm starting to get older, right?
Time flies.
Yeah, the grays in my beard are starting to say, hey, man. But yeah, I've been in the business for about 4 years. Got in the business after the tail end of the pandemic. I've been a basketball coach. I own my own basketball program. I've been doing that for 13 years. Decided that I wanted to do more. I had more time on my hands. So jumped into mortgage and fell in love with it. Fell in love with helping people become homeowners, the American dream. So fell in love with that. And ever since then, I've just been trugging along, trying to help as many people as I can, still coaching basketball. And
good deal. Well, it's good to have you back here at home.
Absolutely.
Base, baby.
Absolutely.
Now, my next guest is a gentleman that I've known him since we were younger. And seeing his growth is incredible as a person, both personally and professionally. So much so that I asked ChatGPT who he is, and this is what it said. Joseph Milhouse serves as a senior vice president at PNC Private Bank, where he plays a critical role in guiding high net worth clients through the complexities of financial planning, wealth management, and investment strategies. With a deep commitment to empowering the next generation, Milhouse emphasizes the importance of financial literacy and mentorship in his work. He approaches the relationship building and financial advising is marked by a strong belief in fostering genuine connections that lead to mutual success. At PNC, Milhouse is known for his expertise in navigating the stock market, helping clients make informed decisions that align with the long-term goals. He also advocates for embracing failure as a critical learning tool, encouraging transparency and self-reflection as a key resilience and growth in both personal and professional realms. His leadership and insights have made him a respected figure within the financial community. Without further ado, Joseph Milhouse. I told you that was good, man.
Wow.
That's you, man.
It's kind of unbelievable that came out about me, but
There you go.
hey, appreciate it, ChatGPT.
Right?
Drinks on me next.
Yeah. That's awesome. Yes, sir.
Yeah, man.
How you doing, Joe?
Man, I'm doing well, man. I can't complain. I'm just happy to be on this great platform. And that sentiment is shared, right?
Absolutely.
Because the three of us grew up in the same neighborhood.
Absolutely.
And so to see the three Parkwood guys doing what we're doing today is amazing. Man.
I have to agree with that wholeheartedly. I mean, I can't say, and at times I will say, man, I came from nothing. And compared to the other kids that we grew up with,
Yeah.
we did have nothing, you know?
Yeah.
Now, we weren't well off, we weren't poor,
Yep.
but we were middle class
Yeah.
at the time, and
Yeah.
middle class was the okay place to be.
Yeah. There was a place for middle class at the time, right? So,
That's a great
point. Absolutely. Yeah.
So that being the case, first time on Key Factors podcast, we're going to find a way to tie in what you do to real estate at some point in time throughout this. But before we do, I want you to tell us, our listeners, our audience, who you are, how you got to where you are today, because I can tell you big strides, brother. Big
Man.
strides. Yeah.
Well, that's a very interesting and good question because we have Preston here, right? So I'm gonna take it back to high school.
Okay.
Right?
And by the way, you guys, Preston is co-hosting with me today. All right. We're not interviewing Preston. He's going to be helping me chop this up.
So in high school, right? So I went out and tried out for the basketball team,
Okay.
and I didn't make it, and I was upset, Actually, I made JV, but I wanted to make varsity, and I was upset about it, and I was very competitive.
Yeah.
And so my mom was the one, when I came home, I told her about it. She was like, well, hey, you have these ambitions of going to law school. She was like, why don't you try out maybe speech and debate? And I was like, Mom, like I'm cool. I like girls. Like that's for nerds.
Yeah.
And so my mom said, just try it out, right? So went ahead, tried out for speech and debate. And I sat in the back of the class, and shout out to Miss Ann Smith because she was the game changer with it. She was our debate coach. And so my junior year, I waited and went to you had to do a tournament the very last semester, or I think it was just I want to say it was December of my junior year. I went and I was trash. I think there was 10 people in this particular event, and I placed 10th.
Oh, okay.
So I didn't try anything like that. And so I came back and I was like, wait a minute, these people aren't that much better than me.
Yeah.
And so I'm like, maybe I'll just try a little bit. And so started trying, man. And from there, it just took off. I went to George Mason University for speech and debate camp. That's the most nerdiest thing ever. I went to the speech and debate camp at George Mason my summer going to senior year. And I came back my senior year and rocked out, man. I was 6th in the state of Texas and got an opportunity to go do speech and debate on the collegiate level.
That's awesome.
Got a full scholarship doing that.
Amazing.
And then 2008 hits. Right. So I remember I'm in personal finance class at the time.
Okay.
And I'm watching Lehman Brothers go under. And so at that time, I was still thinking politics, so hit law school, maybe shift into that. And all of a sudden, I saw an opportunity. I was like, well, wait, I don't really understand this personal finance thing going on right now, but it sounds like the wrong people were investing these individuals' monies and taking different bets with people's money. And I saw an opportunity there. I was like, well, I'm pretty good at taking complex topics, simplifying them to my audience.
Yeah.
And I also saw that, well, I'm pretty good at doing building that relationship side of things, right? Really cultivating that trust.
Personable, definitely relatable.
Yeah.
And I use that as an example of how our ethos, myself, Preston's, is so high caliber simply because we grew up around so many different
people.
types of
Different
cultures,
people.
different,
Yeah.
absolutely. But go ahead.
And it worked out. Like I remember when I graduated, I wanted to go up to either Chicago, New York, and work, but no one was hiring because it was right after the financial crisis.
Yeah.
And you and I kind of got into the mortgage game at the same
That's right.
time. And so I went through Wells Fargo's analyst program. It's called Talented 10th after W.E. Du Bois. And had some great mentors that brought me through that program, man, and was client facing immediately, which was great because I started in mortgage, and this is right after the financial crisis. So this is the toughest subject
Yeah.
to have with somebody because mortgages, that's going to be the largest purchase that most people make in their lives.
Absolutely.
And so when you're having a conversation with someone and you're like 22 years old, I mean, I didn't have a home, man.
Right.
I didn't have any money, and I'm over here talking about, hey, I can help you. Like that started, for me, my career in being able to, number one, cultivate those relationships and then get beyond I would call it the imposter syndrome.
Yeah.
Right?
Fake it till you make
You
it.
know what I'm saying?
Mhm.
Because all of a sudden I'm thrusted in this and I remember the first lady I sat with, man, she hit me with how can you help me with my mortgage? You can't even grow facial hair. So and so from there, my career just began to progress. I did well in mortgage. And I wanted to learn the other side of the balance sheet to be able to kind of advise holistically as well.
Absolutely.
And so that took me from there to Morgan Stanley, to Merrill Lynch, to now I'm a senior vice president now at PNC Private Bank. And the role is to be that deep generalist for our clients, to be able to discuss everything financial with you. And so it's worked out, man. It's been a blessing.
That's awesome. And the journey itself, I'm betting wasn't easy. You don't
have to bet on that. I'll tell you. See, this is the thing. And Mark, I'm gonna give you your flowers right now.
Yes, sir.
I have been an admirer of you from afar for the longest, man, because there was a natural competitiveness there.
Yeah.
Because we got in the game around the same time.
You're gonna make him cry.
I've gotten soft in my old age.
And so, but yeah, man, like if you read my resume, it looks like, oh, this guy's career is going like this. But people who really know, like my wife, my closest friends,
Sure.
man, it's been ups, downs, and it's really been just getting out there, putting yourself out there.
Yeah.
And I love the fact that you put yourself out there from the beginning and then you started your own company, man. That's why I was like, I need to get on my guy's podcast, man. Like I got to show some love to him for this, man.
Well, this podcast I started 2.5 years ago. And gosh, man, we had like 0 subscribers for so long. And it was like, okay, I'll just put another video out. I'll keep putting another video out. And slowly but surely it has cultivated into this platform that allows folks like yourself, like myself, like Preston, experts to be able to be real with the audience.
Yeah.
Because most people, perception is reality. So whatever they see on social media is what they believe. So therefore, your friends that just saw the trajectory doing this didn't get to see behind that curtain.
Yeah.
So they think, gosh, there's no way I can do it as fast as him, or there's no way I can get to that next plateau to increase my net worth, to increase my livelihood, all of the things. And what I found is every single guest that I've had on here, mind you, I only have experts in the field, have all had similar struggles, have all had similar adversities that they've overcome, but nobody knows about it.
Yeah.
So this gives an opportunity for you guys to be transparent and kind of go through any of the struggles that you've gone through, how you overcame them, how you utilize what you've learned thus far to capitalize. And I say capitalize, number one, because I am a capitalist, but number two, it essentially, where we're at right now, I can guarantee you not a single one of us is where we want to end.
Correct.
Up, right?
Correct.
But the world looking in thinks we've already made it.
Yeah.
Right?
No. Yep.
We're just a couple of dudes in here rapping about some financial stuff.
That's it. That's it. I think that, and Preston, I want to bring you in on this one here. What was your story that shifted you into the finance and mortgage game?
So,
Because that's a tough time during the pandemic.
good. Yeah.
You know, like
Well,
that's a tough time.
Not only that, but I'm gonna toot a horn before you start. Preston was Rookie of the Year when he jumped in,
So I saw a lot of,
and it definitely was his good looks.
He's always been the looker, man.
but yeah, somebody's got to bring it into the family.
No, go for it, Pete. Go for it.
To be honest, being what I was as a basketball coach, coaching and molding the minds of the youths, I always knew that there was more for me. I always knew that there was more that I could bring to the table, because at the end of the day, when it comes to youth sports, 99% of the kids aren't going to make it.
Yep.
They're not going to make it making money playing that sport.
Yeah.
So how do we do that? How do I mold that? So then I started to think about, okay, well, what do I have in my life? What models do I have here? So I took in what my brother here, Mark, was doing, and I said, you know what? I can do that. I can get into that. So I did real estate for a year. I didn't enjoy that side of it. It just wasn't for me. That side of it, of taking people out to find houses and listing houses, that wasn't for me. But how do I help people more than just now? Okay, well, we get into mortgage. It's more than just like you said, it's more than setting people up for right now. Well, okay, you're buying a house now, but you may not be in that house forever. What are you going to do later on?
Yeah.
So I really wanted to tie that, and then also try to bring that towards the kids that I coach.
Yeah.
Of, okay, how do I help these kids get set up? All my high school kids that I coach that are graduating, I talk to them about this stuff.
Mhm.
It's not just, oh, this is basketball, you got to do this, you got to. No, okay, well, basketball is a small part of your life. What do we do to set you up? Okay, so now I tell kids about internships. All right, what do you want to do? Do you want to come talk to me about mortgages? Let's have conversations. So it really tied in extremely well to what I was already doing in my life.
Gotcha.
I had never heard you answer that kind of honestly,
Yeah.
and that is a cool concept, because I believe that there's plenty of coaches out there,
Mm-hmm.
but there's also plenty of coaches that are not making it applicable to the kids in real life. Similar to, I had a discussion recently about teaching finance in schools at a younger age.
Mhm.
And no, I'm not asking you to be a financial advisor to these kids, but put it in the way of a game. Each month, the kid gets a new career and they get a paycheck based on that career, and they get to budget, etc. So that way they get a little bit of fun. They get a little bit of basic understanding of how this game really works.
Yep.
Because we're not asking our teachers to be financial advisors, but I also can't ask of a teacher with the salaries that they make and the moves that they're not able to make, be the advisor for what their future should look like budget-wise, financially, etc. But simple things like, okay, if you want to be a teacher, you're not going to buy that Mercedes-Benz, the house that's $1 million, and you're also going to go on 15 vacations in the next 3 years.
Mm-hmm.
Perspective.
Yeah.
I think we hide the struggles too much from our children. I think, just like you went through your struggles, he went through struggles, I go through struggles. We hide those from our kids. We work so hard to let our kids see that everything's okay instead of showing them these are struggles. This is what life is. Not everything's going to be perfect all the time. So if we don't show the kids the struggles when they grow up, what are they going to do? They're going to think, oh, their first adversity, they're just going to quit.
Yeah.
Yeah. See, I have to totally agree with you on that, right? Because I would argue that our generation was the first generation that came out the game, because we're coming through Great Recession, and it's like, hey, we did it the right way. You said go to college, we went to college.
That's right.
And a ton of people couldn't find jobs.
Still.
You know what I'm saying? And so, and they're still paying off these student loans.
That's right.
I was fortunate where I was able to do that, but I was able to do it through a different process, right? So, and this is, let's just kind of peel it back a little bit.
Yeah,
right?
let's go.
Let's get real. So, all right. So I was fortunate enough to get the internship through Wells, right? So my mom, just being just an amazing cheerleader. Same thing with my dad. They put me in places to succeed, right? And so, like was in high school because I was thinking about going to the academy, and I was a congressional intern. My freshman year in college, I interned with Bearing Point. I had a Time Warner marketing internship, right? So I'm thinking I'm doing everything the right way.
Yeah.
And when it came for me to go out there and get the big job, I couldn't get it, And so I had to go through the internship program, as I was telling you about. But once I decided to pivot into the investment space to learn that balance sheet, and this is why you got to keep good people around you, right? So I remember I was having a conversation because rates had ticked up. I had really rode the gravy train with the refis.
Oh, for sure.
And so at that time, and I really wasn't doing what you were doing, which were you were out there building those relationships.
I didn't even know how to do a refi at that time. Everybody was hitting refis, and I'm like, let me show you how to buy a house.
And so, I was making, decent money thinking that this is going to continue. Man, rates ticked up, I want to say 0.25%. That stuff dried up.
Yeah.
And so that was my awakening where I was like, okay, I want to maybe get back on path with what I initially was thinking. And so I went ahead and I put myself out there, and I was like, I was a senior mortgage banker with Wells. I was like, I will take a step back. I was like, I'm going to put an internship application in for Morgan Stanley.
Yeah.
And so I applied for this internship. I'm like, they're going to see that, man, I've done well. I'm about 4 years in my career at this time. I should be able to outshine on these interns, right? And so right after I put that application in, I went online just to Google, okay, what's the process? The first article that comes up, and I think they were more so talking about investment banking, but the article read something along the lines of you have a better chance of getting into both Harvard and Yale than getting a Morgan Stanley internship at that time because it was so competitive. So I was like, you know what? I'm going to go ahead and do something that no one has ever really done or does in our generation. I'm going to go stop by the office, drop a resume and cover letter off, right? And so y'all know my boy Lawrence, man. I mean, that's my guy. And so we were supposed to be going out to hit lunch. And so the Morgan Stanley office is at the McCone's building. So down there, close to the Pearl area.
Yeah, perfect. Yep.
And so I go up there, man. I have my suit on, man. I have my resume and cover letter, and something told me to grab 2 copies. Walk up there, meet the receptionist. I'm like, hey, my name's Joseph Milhouse. I just put in for an internship yesterday, and I'm hoping I could sit down with somebody and ask for an opportunity. Lady's like, wow, no one does this.
Wow.
And so she goes in the back. She's like, hey, the VP's here. Let me go talk to him. And so she comes back, maybe like
she runs to the back, and she's like, I got this nerd over here.
And so she comes back and she's like, well, look, he's on a call. He's getting ready to go to lunch. And so if anything jumps off the page, he'll reach out to you. So I'm like, damn, I'm getting blown off. And so I'm like, you know what, just give me his card. I'll reach out to him, right? So I'll walk out. And so Lawrence thought I was going to be up there for a while. He was supposed to be just waiting in the parking lot. My dude's in the lobby with his feet up, chilling. And I'm like, come on, bro. Like what you doing here? He was like, man, I thought you was going to be up there for a while. And I was like, nah, man, let's roll, man. They blew me off. And so Lawrence is like, well, did you get a card? And I was like, yeah. Lawrence pulls out his phone, looks up the guy on LinkedIn. And he's like, is this the dude? And I was like, I guess so. I didn't see his face, but that's his name. And he was like, man, we don't have anything to do. How about we just sit here and wait for him? And you just give it to him. And so I shit you not. Sorry, Mom. Because the story still makes me tear up a little bit.
Yeah.
I kid you not, man. Like maybe 2 or 3 minutes. Dude comes off the elevator. Lawrence is like, there you go, right there. I walk up to him. I'm like, hi, Mr. Stevenson. My name is Joseph Milhouse. I just dropped a resume and cover letter off upstairs, and I wanted to wait to give this to you personally. I'm seeking an opportunity. And the guy looks at me. He's like, no one does this. And so he starts looking. He's like, okay, so you got the mortgage side. Okay, well, do you know anybody who can give you $20 million today? I'm like, what?
I don't know anybody with $20 million.
Like, what? That's like Monopoly money to me, man, at that time, And I'm like, no, sir. And he's like, well, the job that you want, you can't have. But because you showed this hunger to learn, I'm going to create a role for you.
Wow.
And my man put me into the private banking advisory associate position, which was able to leverage my mortgage experience, my lending experience, and then to pretty much just consolidate that into a holistic role where I'd be able to potentially advise clients on the investment side. I'm excited.
Hopefully, right?
Hopefully.
Yeah.
Man, I passed my 7, and you have one attempt on the 7. I crushed the 7. Crush it. For some reason, I couldn't pass that 66.
66. Yeah.
And you had 2 attempts. And I ended up, and well, I'll come back to that other story later in the pod, but I ended up having to leave Morgan Stanley.
Okay.
But what I ended up doing is, since I was sponsored for my 7, I still had that hunger, and you had to wait 30 days, right? So I went ahead and took it in December after I failed it in both October and November. Passed that thing by 3 points. Went back up there and told my guy, "Hey, I passed my test, man. Can I get the job back?" Guy was like, "Nah, can't do it. We gave it to someone else." But literally, I would say 2 weeks after that, Merrill Lynch calls me and they're like, "Hey, we got an opportunity," and it just took off from there.
Wow, Joe. Okay, so I want to chop that up.
Yeah.
We haven't even gotten into our topping yet, ladies and gentlemen, but this is fantastic. And I hope you guys are getting some stuff out of this. You mentioned something that hit real hard, and that was at the time that you were doing okay.
Yeah.
Mortgage rates went up a little bit. You could have just kept chugging along and adjusted what you do like most people do. Okay. 99% of people take the safe route.
Yeah.
But you bet on yourself.
Yeah.
You doubled down again and again within a short period of time.
Yeah.
And I don't normally bring up this next topic, but I'm going to, because I'm with family right now.
Yeah.
There's a lot of folks out there that believe that our ethnicity is held down or held to a different standard or oppressed. I said it.
Yeah.
You, in your story, in your trials and tribulations that you just articulated, proved that as an example of not giving up, going the extra, doing things that others don't do, don't normally do. No, they don't do it.
Yeah.
Especially this generation. You're lucky if the kid shows up and their parents aren't with them. You know?
Yeah. True.
And again, it's just betting on yourself is a message that I hope rings home with plenty out there. I don't care what your nationality is, any of that stuff, but it all boils down to you, your decisions you make. And example, you chose the path of going to college, doing fantastic. I went off to college, didn't do so great. Went 4 years, joined fraternities, learned business, opened small businesses, and then got into the business sooner than you. Now, if you had to ask me, you'd pencil whip me all day long, literature, books. and that's why I've got you on here to help me digest some of this stuff that we're going to talk about here in a minute.
Yeah.
But it doesn't matter what path you took, the decision, the choices on that journey, the rights and lefts and over the mountain and through the woods that you choose to decide are always going to be on you.
Yeah. I 100% agree with you on that, man. From a standpoint that it has to be in you. And one of the things that I look at now that I'm married, I'm going on, 2 years in October.
Congratulations.
Man, appreciate it, man. And
ain't shit.
but it's one of those things of, when I even look at just what my wife's family and my family had to go through just for us to be here.
Yeah.
Like, my wife is really the brains. Like, her story, her family story, man. My wife is a 4th generation physician.
Wow.
Black woman, right?
Okay.
4th generation. Like, her great grandfather was a slave turned doctor. Then her grandfather, doctor. Then both her parents, doctors, and aunts and uncles. Then her.
But he didn't learn any skills. I'm sorry. I'm not sorry.
But it's all on you. And I think that's the approach that is not taught. I think that there is this there's this idea that everything is supposed to just come to us. And if we follow a basic blueprint of, well, if I go to school, then good things happen. No. It's now becoming a level playing field.
I agree.
Certifications are becoming more of the demand. If you're naturally skilled, is always been in demand.
That's right.
So this idea that you have to you have to sit there and wait for opportunities, I think is obsolete because we're now global. And so there are people in India that are going to take the opportunities that you don't, that you're not looking for because they're more hungry.
That's right.
And a lot of those jobs can be shifted out, right?
No,
And
that's
so
factual and accurate. I have a virtual assistant that does more for me for $200 a week than I could ever get anybody to do for $200 in an hour. Here, to be honest.
And that's really what the pandemic did for us, right? Is that remote work. So you're no longer competing with people in San Antonio. You're competing with people all throughout the United States and all throughout the world now. And so you have to find a way to make yourself unique. And that's what I'm loving about the generation behind us. I think the idea of truly becoming your own boss and your entrepreneur, I think that is going to start taking off because a lot of the cush gigs are going to be taken up, and so it's really about you creating something from the ground up, I think. And that's why I applaud the hell out of you, bro.
Every day is a struggle, man. I tell you what, there's nothing that is easy. Like I said, the reason why I do this podcast originally was to get education out, to find a cheaper way for therapy for me. And honestly, it has now culminated into conversations like this that hopefully will go far and wide, and it'll impact one person that changes the course of their outlook, life, what have you. That being the case, all the mushy stuff now that we got out of the way, JC, what are we about 20 minutes in? 31. Okay.
Oh,
we're
man.
doing So we came here today to talk about some financial aspects, to get a little bit of understanding of what's going on in our market, how things are progressing, are retreating, and overall affecting everyday consumers. And from your seat on the bus where you advise folks, not only are you advising, but you have to interpret and study and understand these predictions, because let's face it, the stock market, you're gambling.
It is. I mean, so our strategy is we're goals-based advisors, right? Now, everybody says that. It's so commoditized at this point. And so really what we're looking at is understanding a client's balance sheet, right? And so we then understand your balance sheet, and then we extrapolate, what your cash flow is needed to sustain that as you continue to grow your wealth, and then as you end up through your phase of potentially retiring and then starting to take distributions off of that wealth, right? And so our client base as a private bank, it is going to be that high net worth, ultra high net worth space. So you're looking at about 3 million liquid to be a client of ours. Typically, we're looking closer to about 10 million to where we can get a little bit more, I would say, more unique in our recommendations and solutions.
Sure.
But the principles and the base, it flows through everyone, right? And so what we're kind of seeing in the market right now is, of course, what we saw a couple weeks ago, right? Is that, it looks to be that there is some type of correction on the rise, right? We did have a slight pullback due to the carry trade. And what the carry trade is kind of high level. You had the Japanese yen, where Japan had been at negative interest rates. And so rates have been closer to about zero. And so during the pandemic time, so during the time when you got into the mortgage game, we knew that rates were going to at some point have to increase. And so there were the smart money or institutional money that went ahead and bought the Japanese yen at about 0%. Okay. They went ahead and bought and borrowed in that currency, and then bought, the US dollar. And so over the course of time, rates started ticking up. And so if I have the Japanese yen at 0, and when rates were at, let's say today, 5%, I now have a 5% basically spread there.
That's right.
And so they would then take their spread and then invest it into emerging markets. Well, it was really the perfect storm again. And so what we saw was that the data from the United States, we started to see that things are slowing down. And then, of course, you had in Japan, they ticked their rates up just a quarter. That's what created what we recently saw, that quick downturn in the market. And that was due to the fact that a lot of people were then dumping those positions. And so that's what then created that quick downturn in the market. But now things are starting to stabilize. And the stock market, and this is the deal. A lot of people look at the stock market thinking that that's a great indicator of how the United States and the Americans are doing.
Mm-hmm.
This is the thing. Most people aren't invested in the stock market. Everyday people, a lot of them aren't going to be invested in the stock
Matter of fact,
market.
we talked about it on the last discussion. And one of our guests brought up the actual statistics because they came out just recently that I think it's something like the top 10% owns 50% of stocks that are in the market.
Yeah.
Then the bottom, I think it's bottom 80% owns less than like, oh my God, I think it was like 10%.
Oh yeah.
The remainder is that other 20% gap there.
Yeah.
So the question was prompted because you see it in the media. The economy's doing great. Look at the stock market. Well, in my opinion, the stock market isn't a good indicator because if you ask me, I'll be honest, I don't have any money in the market anymore. I took it out.
We need to sit down and talk about your bank. Because I know you got that break.
No, I tell you what, my journey with that, I also worked at Chase back in the day. That was one of my first big boy jobs, so to speak, after working at the bank inside of Walmart. I was selling annuities. I was referring them to my FA. I had to get licensed. But the idea when that happened in 2008, it was like, I'm not going to put my money in that. I don't understand it enough. Just because I'm licensed doesn't mean I study it or know what's going to happen or even know what kind of prediction to make to articulate and back up what I just said about it.
Yeah.
You know?
Yeah.
Then you fast forward, and at that time, pulled it out, said, I'm not doing 401ks. That's when every dollar extra either went into some type of risk or high risk business that either succeeded or failed, or real estate. Because it was safe there. And fast forward, pandemic rolls around. I get a call from Josh Kern, said, hey, did you see Six Flags? What are you talking about? He said, it's like $6 right now. You need to go buy it right now. Buy a bunch of it. Okay.
Yeah.
You know? Yeah. Knowing that regardless, it's cyclical. It's a seasonal type place. Right. It made sense to me. Okay, dump. Now I'm in Bitcoin. Now I'm in Dogecoin. Now I'm over here in Alaska Airlines. Now I'm not doing anything during the day but playing on my damn phone. Oh, Tesla split. Yeah,
let's get it.
Leveraged it all over to Bitcoin and lost my ass. Yeah. And it was like, I'm done again. This is something that I don't have the expertise to advise for myself. And it's tough to trust someone simply because everybody, like you said, everybody's got the same spiel. You know? You don't get to the heart of anybody and know, how does this affect you if I lose?
And so Preston, before I jump in, I wanted to bring, what are your thoughts on that, man?
Man, I never really got to the point to where I jumped into stocks, you know, same thing there. You know, I'm in that percentage that never really got into it. I never really learned about it. I never really thought about it. I tried to get in for a little bit. You know, same thing. My buddy Josh Kearns that I've known forever. He told me about some stuff.
That's my neighbor, man.
Yeah. Josh. Yeah, he was neighbor with Josh. Yeah, he knew Josh.
Yeah.
So I never really got into understand it. It's something that I wish I would have got into understand, because there were times whenever I could have, you know, when I never got into it. I wish I would have.
Yeah.
Now, the second thing to add to that, which I think is a big piece of it, you've been self-employed since day one.
Yeah.
So the only things available were Roths and
I was just about to say that.
Go for it.
And so business owners like yourself, right? See, this is the thing, is that you already understand risk because you're already in your own business.
Yeah.
Right. And so we look at working with business owners because we love working with business owners because you understand that bottom line of risk. And your nest egg is your business until, you know, eventually you're going to continue to invest, and then eventually you're going to sell at some point. Or
sell or hand off.
You know. But that's always the rule. You're going to exit your business some way, whether you sell it, hand it off, or you die.
That's right.
Right.
Yep.
And so that's where I believe that just having someone who's just basically managing your money, that's not to me. I don't think that that's the appropriate type of advisor that that I would solely look to work with.
Sure.
And in some cases, it makes sense.
Mhm.
But in most cases, I would want someone making sure that, okay, number one, I'm tax efficient.
Yeah.
Like what you've had a few of your shows on fees,
Yeah.
you know, where
Yes.
you've talked about, you know, okay, do I go ahead and discount this? And your argument is no, I'm good, and
Right.
I'm right there with you. And the reason why, even when I'm sitting across from a client, you know, a client would be like, you know, what do you charge, Joe? Well, I'll tell them, hey, you know, depending upon the asset, you know, you're probably going to be for 5 million, you're probably looking at about 70 basis points a year. But with that 70 basis points, let me tell you how we're going to help. Number one, advise your family.
That's right.
So the number off the back, we're going to be tax efficient for you. So we're going to be able to help you if you're a business owner going through business succession planning. We're going to be able to tell you how we can help save you X amount on taxes. We're going to help you establish that estate plan. We're going to also help you advise ensuring that you have minimal risk, right? So you're going to have that insurance component if you need it. And most wealthy people can self-insure, so that's not something that we typically lead with, but risk management from a standpoint of portfolio management. And let me give you an example, because we were talking about, you know, earlier, what makes, you know, since everything's commoditized, how our team goes to market. So number one, I'm the head senior relationship strategist on our team.
Okay.
So my job is to kind of
AKA
be
HNIC.
here you go. This man told this to the class, a CrossFit class in Bernie, and they were like, "What is HINC?"
Google it.
Yeah.
Picture Morgan Freeman comes up. I think only 80s and 90s babies are gonna get that.
Absolutely.
But basically, the way we work is my job is to kind of sit down with business owners like yourself, right, and understand your needs. And then I assemble the appropriate team around you. So if you're going to need, you know, let's say a wealth strategist, if you're at that point for financial planning that, hey, I'm going to need business succession planning, I'm going to bring in my wealth strategist. And that wealth strategist, she's bad. I mean, Cal Grant is one of the baddest. My boy Andrew is one of the baddest. I mean, these people are JD, CFPs, have worked on multi-million dollars. I think Cal's worked on a couple $1 billion deals as well. Very experienced and seasoned in that space. I'm going to bring in also my CFA that's going to operate your investment portfolio. And our investment strategy, kind of going back to your point, Mark, is not going to be this approach from a standpoint of, okay, I'm just going to make sure you have a diversified asset allocation. As diversification matters, but we start with the bucket approach. And what that means is like, okay, Mark, Preston, what are your non-negotiables? What are the things that you're going to need to make sure that you're funding, which is going to be like a house, and eventually your house is going to be paid off. But you know, what is that going to look like for you, for your non-negotiables, that your necessities that you need? And I'm going to buy a 30-year treasury for that. I'm not going to even have any risk for that. Safe. And the reason why I want to do that.
Well, we'll get into that shortly.
Well, there's always interest rate risk there, right?
Of course.
But still, if I'm getting, let's just say if I'm locking in 4.25%, right, or 4%. If rate of inflation, we always look at about 2.5, right? So I got about a 2% spread there, right? And so if I'm able to get you 2% on that money plus lock in, and let's say we're funding it over the course of time in that asset accumulation phase, that's going to be your nest egg there. And everything else we invest in what we call a surplus account. That one we're going to get a little bit more granular with, right? We're going to be a little bit more aggressive with because the time horizon's further out. And so what we do when we have markets like we had a couple weeks ago, we don't get calls because our clients are looking at it from a position of, well, my nest egg, what I need to live off of is fine. And we already understand that it's going to be, you know, ebbs and flows. There's going to be ups and downs in the market with your long-term money. And so as long as we're able to sustain what you need up front, everything else takes care of itself. And so it's just a different way of looking at it because you become more intentional with your investment versus just saying, I just want to buy the S&P and just see what happens.
And I'm going to tie this back to real estate, because the one thing that separates you from any other investor, manager, advisor is you can justify your value. You just did it right now. And where I'm tying this to real estate is there's been a recent, bombshell on the real estate side of things to where commissions are changing.
Yeah.
People are having to justify their commissions. They're having to articulate what their value is. And plenty of them are scared because they've never had to do that. If you got in the business from 2020 to 2022, you've never had to, it was, I needed a realtor to do this contract and you're going to make 3%. That's just standard.
Yeah.
And now you're having a lot of realtors that are battling with this concept of what you just did.
Yeah.
and take my money.
Yeah.
You know,
Yeah.
that in itself is an example of it doesn't matter what industry you are in, you better be prepared to justify your value,
1000%.
articulate your value.
Yeah.
You know,
Because if you can't articulate it, then there's no way that anyone else is going to be able to see it.
that's beautifully said.
You know,
Because we are not selling tangible things yet.
Correct. And I think that it's for me at least, I think it was kind of going through, you know, my ups and downs in life where you begin to refine it.
Yeah.
And that experience allows for you to then say, okay, I think I want to approach business this way now, and becoming more of a student of the game.
Yeah.
And I think that's one of the things that you two do, especially with your platform here, is that you're providing that knowledge, you're providing that different perspective. And I think that's what people have to do by listening, but then like to shows like this.
Sure.
But they have to do it and internalize it themselves.
Absolutely.
I think you just made a really great point right there in saying that you had to refine it.
Yeah.
I think what many people don't realize is that one way is not the only way.
Correct.
And when that way doesn't work, you fail and you go back and do it again and you refine it. But I think people, after they hit one, maybe two walls that didn't work, they stop. They give up. And that was a very well way to put that of you refined it and refined it and refined it.
No.
And you're probably still going to refine it now.
Yeah.
Like it's not, you're not set.
Because people are people, right? And so, you know, it may resonate with, you know, the business owner that's getting ready to sell their practice that's also a physician, but I'm also going to want to approach the biotech company, right? And so you have to be able to, number one, read your room, right? And this goes back to what we were just talking about too. You're going to have to be able to articulate that value prop and finesse it to the needs, because not everyone's going to need the exact same thing.
That's right.
You know, so let me hit you with this one. So we were talking about houses earlier before we got online here. And so my wife and I, we initially had bought in Katera Manor, right? So we had built in that neighborhood. So right off of Babcock there.
Yep.
Beautiful home. And my mom had a stroke in 21, right? And I lost my dad in 21. So 21 was a really tough year. And like, I just got engaged that February and lost my dad in April. Then my mom had stroke in September. And then I had started the job at PNC in October. And we just had a lot of stuff. And plus we were planning a wedding for 22. And so we had locked in our interest rate. I want to say our rate at that time was I want to say that thing was, call it 3.75, 3.5, somewhere in there.
Okay.
At that time, because we had did the physician loan, right? So it's a portfolio loan. So they're going to charge up a little bit more, because I want to say we could have got like somewhere around 300 more at that time. And so with my mom having the stroke, I was like, well, my mom may end up coming to stay with us at some point. And so my wife, being the loving person that she is, she's like, hey, we got to figure this out, because we had some stairs kind of going up, and the turn to the master bedroom or the guest bedroom where she'd be staying was kind of tight. And so we were like, well, let's look to move, right? And so we looked in your neighborhood, and we came across a property in Katera Hills. And so we went ahead and moved in that neighborhood. I want to say that was during 2020. We started the building process in 2022. And this is where I wanted to get you guys' advice here. So we sold our home, right? And we had a great realtor, Glenda Cook. And what Glenda was able to do for us, she was like, hey, I need you to look at this in a different way. Because we had bought, I want to say, for right around the high 6, kind of low 7s. And what I was looking at, I was like, well, I don't want to have to come out of pocket for anything. So I want to make sure whatever we take out of here is rolling into the next house. And so I put the home on the market for $850. And got a couple bites, but no one was tracking for it because, you know, there's not a lot of yard there, you know? And so we had a guy come in, and he was like, he didn't have a realtor.
Okay.
And we did an open house, and he ran into Glenda, and Glenda was like, "Hey, what do you think of the house?" I was like, "Hey, me and my wife, we love it." Glenda was like, "Hey, do you have a realtor?" She was like, "Well," they were like, "No, we don't have one just yet." And so Glenda calls me. It's like, "Hey, I would like to represent both sides here, Joe." And she's like, "I'm gonna cut you a deal to where, since I also had her on the build, she went ahead and worked a deal for me
Sure.
to where instead of charging me 6%, I think she charged me about 4.5%.
Okay.
Right. And
So she basically, what that is, ladies and gentlemen, if you're not in the real estate business, essentially it's kind of a move up program and an incentive for that buyer. It disincentivizes the realtor, but still leaves a long lasting good taste in that seller's mouth, essentially allowing that realtor to take 1% on the sale, giving the 3% to the other side. And in this case, she's taking 4%, and there's nothing wrong with that. She's having to do both sides. And then essentially getting the full comp on the buy.
Yep.
And the reason why we do that is hopefully the buy is a little bit higher price than the other ones.
Yep.
But it makes sense.
And what she did, she actually, on the buy, she cut me back a point.
That's awesome.
Yeah. Because like I said, that's like a big sister for me.
Solid agent, right?
And we were able to get that done. So, and plus we had a 2-month lease back.
Yeah.
Right. And so I was like, well, man, this is a win. So I pocketed, not only, the 1.5% that she saved me, but I pocketed 2 months mortgage payments.
Right.
Right. Plus, I got the 1% back. And so I think that there's something to, making sure that you have that level of collaboration,
100%,
in this business and in this game. And that comes through being around people and learning that, because most people are gonna be like, well, wait, why would I give you back something here?
That's right.
And it's like, sometimes it's better to give than receive, because you're going to end up receiving a bigger blessing at the end of the game.
Amen to that. And it has happened in my life. I'm sure yours, time and time again. It's the idea of folks looking at the right now benefit or gain versus planting that seed and allowing that to grow, which then spreads into additional customers, referrals, family members. And now all of a sudden you've got a residual based business that's built on your hard work, expertise, value that you provide, the level of service that goes above and beyond the others that aren't able to do that. That's why they got to charge the full amount every time, because they don't know when their next deal is going to come.
Exactly. And being full time in that that game, you got to do that.
That's right.
So I'm gonna throw this back to you guys, but because what I've seen is that, so when we were going through the build process, right? The appraisal was the appraisal at the time. We close on the house, right? And I want to say we closed on the house in December of 22. I get a tax bill.
Okay.
Man, I get a tax bill, I want to say the first week in January.
Yep.
And that thing goes from like around 1.3 from what we initially appraised at to now 1.7. And so I ended up having to fight it.
Same thing.
I ended up having
Literally same numbers.
And so, like, okay, so
And we're talking $26,000 in taxes to $28,000.
easy. So my question to you guys in this is how are you navigating that with your clients? Like,
It's a great question. And for us in our side of the tracks, you have lenders that are just trying to put them in the home. And then you have lenders that are advising them and setting proper expectations, painting the real picture, even if it's not a pretty picture.
Yeah.
And in your case scenario, they set you up on unimproved initially. Collected a lower amount, made it look really good on paper. Then all of a sudden you got your tax bill. Property has been assessed. Now, it's not just the land anymore.
Yeah.
Matter of fact, we just had a massive uptick in values, and you're part of it.
Yeah. No, I know, man.
Yeah.
So you did the right thing by disputing it.
Yeah.
But it's something that I speak to a lot of renters about, because they say, well, it's not worth it because taxes are so high. Okay, I get that. I can't argue with that, because my taxes are up there.
Hi, man.
But at the same time, you're still building equity year after year. Those taxes are something that you can use to write off on your taxes
Correct.
to offset the income that hopefully you're striving to increase every year by
Correct.
making yourself better, by listening to this podcast,
Boom.
and all of these things, But yeah, you did the right thing. There's nothing really else that you could do in that situation other than sell the house,
Yeah.
downsize,
And
we don't do that.
yeah, I was like, because we'd already
yet.
kind of planned for it,
Sure.
but it was still kind of a shocker, and even this year, and so we still got the bill.
That's right.
Now we claimed homestead, right? So that caps us.
Yes.
Yep.
I'm still going to dispute that bitch. I don't care. Every year, I'm going into it. But I think one of the things that when we were going through the buying process, right? Because we were talking about people when they typically buy 5 to 7 years,
Yeah,
right?
right around.
And so for us, I was like, well, let's just go 10-1, because I don't know necessarily if this is our forever home.
Sure.
And as of right now, my mother hasn't moved in yet, but at some point she may.
Sure.
And we don't have children yet. And so we may want to do something else. And so I think that but now my wife understood it after I explained it, because at first she was apprehensive. She was like, why would we do an ARM?
Yep.
And I'm like, well, I mean, most people probably should do ARMs, to be honest with you, because they're in and out of their homes that quick, right? But am I
This
off
is
on that?
great. No. You okay.
Yeah.
You are off on that
Oh, okay.
only because,
Go
okay, and I'm going to give you the reason as to why it was good in your scenario.
Okay.
Also good in my scenario.
Yeah.
We bought our home in 2019.
Yeah.
At that point in time, rates were at 5%.
Yeah.
I secured a 3% for 7 years, 7-in-1 ARM.
Boom.
Okay.
Okay.
So now we fast forward, we're 5 years into our 7-in-1 ARM. Rates are high as all hell.
Yeah,
And we're
yeah.
like, oh man, should we sell? Because we normally sell every 3 years, but
Yeah.
we're in love with the house.
Yeah,
We're in love with the
neighborhood,
neighborhood, everything.
yeah.
But then you sit back and you go, okay, wait a minute. It only increases by 1% each year, worst case scenario. So
Sure.
therefore, if we sell and buy again, we're buying less home at a higher rate versus just letting it tick up to 4.
Yeah.
Letting it tick up to 5. And once they meet, then it's time to sell. But back to your question point, most people should get ARMs. I advise against it.
Okay.
Simply because most people don't have the experience, the intellect,
Fair.
the ability to make decisions and moves, educated moves, and complete those moves.
Gotcha.
There are a lot of factors that are at bay when buying a home: credit,
Yeah.
income, assets.
Yeah.
Very few Americans are consistent with any of those three.
That's true.
So
Yep.
you get into a 10-in-1 ARM that, hey man, it's hard to go wrong with a 10-in-1 ARM.
Yeah,
Because
yeah,
ain't
yeah.
nothing going to happen for 10 years.
Yeah. yeah.
Most people fall for the 3 or the 5-in-1 ARM.
Or these buy downs I'm seeing now.
I-
What the hell is this?
We won't even get into that. We won't even get into that. So essentially what they're doing with a buy down is just paying the interest up front.
Yep.
So that it lowers their payment on paper, but you already paid the money.
You already paid the money. Yeah.
I don't.
And doesn't
I
it grow? You've already paid the money, but they finance that into the loan, don't they? So you're yeah. That doesn't. Yeah.
It's not a good avenue. But in this case scenario, most people at year 3, and I've just seen it because I've been in the business so long, things change.
Job.
Financial aspects change, jobs change. Maybe somebody lost their job. Now they don't qualify. Maybe you missed a payment on something. Now you don't qualify. So now you get to year, let's call it a 3 or a 5, and rates are about to go up.
Yeah.
So now what happens?
It's a tough spot.
That's that idea of looking at that short-term benefit, short-term gain, not looking down the road at, okay, what is my financial future really going to look like 7 years, 10 years from now?
Yeah.
And
yeah.
is this, if I were to be stuck in this, would that be okay?
Yeah. So kind of gauging the San Antonio market, right? So, I mean, we've had I think it was in 2020, it was a 19% increase or
in property value?
property value.
It was
like-
upwards of 20, 25.
And then I think, because I think it went
And then
19,
it happened
20,
again.
and then it happened again, right?
Yes, sir.
So
I can tell you we went from 1.1 to now I think it's at 1.9
dude, yeah.
in 5 years.
Yeah.
So that's a pretty substantial increase, and we're not the only ones that have felt it or benefited from it, because there are, And mind you, at the same time, it's almost a blessing in disguise because what we're facing is the largest credit card debt in America has ever seen.
This is true.
So folks are now leveraging that equity to pay off the debt and kind of hit that reset button.
Yeah, yeah. Because really, COVID, what we saw right during the pandemic is that you couldn't go anywhere.
Right.
So credit debt, kind of went down
Yep.
because people weren't spending as much. And so initially, we weren't really concerned about the data points coming in because we were like, okay, well, this is just stabilizing.
Yeah.
But now it's hit a point where it's like, well, no. This isn't stabilizing. This has now gone through that previous number that we had before to where now it's like everything is so hiked because inflation hit.
Yeah.
That now people are pretty much charging like things like Netflix where you're supposed to be paying off.
Correct.
And so that's what I was getting at, where I was like, when we're talking about the stock market as an indicator of how the economy's doing, it really isn't.
Yeah.
And so that's why I'm asking, like, from a mortgage banker perspective, how are you seeing clients or prospects get into homes now? Because the price point is now shifted. What's what the median price in San Antonio?
300, 320, right at that range. Mm-hmm.
Yeah.
But anything under that price point is either going to be multiple offer situation because it's worth it.
Yep.
Or it needs work. And folks that qualify for that amount aren't able to come up with the funds, aren't able to qualify for a 203K renovation type. But that's what we're facing currently. And the oddest thing, values are not going down.
And that's so if supply, because really supply and demand's impacted that too.
Absolutely.
So are we in a bubble?
I can't say we're in a bubble because we're in Texas. And what I have to rest my hat on is history.
Yep.
So history repeats itself. 2008, if that were to happen again, some type of bubble. That bubble was caused due to fraud.
Yeah.
This bubble, essentially, let's look at supply and demand concept, right? Yeah. Right now, we're at in San Antonio, about 4.5, 5 months of inventory. In order to become a true buyer's market, it has to get to a 6 month or greater.
Yeah.
Now, interest rates start trickling down. So there's hundreds of thousands of people sitting on the sideline waiting to throw their hat in the ring for rates to go down. Well, guess what? All the rest of the people waiting are going to do the same thing. Therefore, prices go up
even more.
That's right. And that is what we are on the cusp of happening, because it's not like people that wanted to buy a year ago said, I'm not going to buy, I'll rent forever.
Yeah.
Very few, despite what the media says, very few want to be renters forever.
Correct. Because I mean, that's the easiest and probably, it's definitely the easiest way to grow your net worth, right? Is to be able to take hold of an asset that just naturally appreciates.
That's right. The average net worth of a homeowner is upwards of $300,000, whereas the average net worth of a renter is about $6,000.
Wow. I did not know that.
True statement. I mean, that is coming directly from the data that just came out.
Okay.
So that being the case, JC, we're over an hour?
An hour and 2 minutes.
I love it. We're on the money. Okay, so I'm gonna have to wrap this up soon, but I don't honestly know how.
Put the camera on Preston's handsome face.
You're right. we may need to have a round 2 of this with a little bit more itemized agenda. But what I want to ask you, and hopefully you can help us with this aspect, because I don't claim to know everything. I'm a student of the game, and even if that game is the stock market. In your opinion, expertise, how does the real estate market affect the stock market?
Well, the real estate market's going to, I would say they're not really necessarily directly correlated.
Okay.
When you're looking at still indicators, like so KPIs, so key performance indicators as to how the economy is growing, it is information that you're going to take a look at from a standpoint of how many, mortgage applications are in, right? Default rates, right? So you're going to be taking in account how those valuations are fluctuating. And that's going to be an indicator as to, in this particular case, like we're thinking that the Fed's going to reduce the Fed funds rate in September, 50-50 chances of 50 basis points, maybe 25. I'm thinking now 25. So that's going to, of course, affect the borrowing power.
That's right.
Which we're hoping that that's going to lower, over the course of the next maybe 6 to 12 months. We're thinking that we may get somewhere closer to about between 4 and 4.5, somewhere in there, And so I would say that is one of the ways that we're kind of evaluating the mortgage market,
Sure.
Or the housing market as it pertains to the economy, as well as of course the stock markets. Now you can still buy mortgage-backed securities,
Sure.
right? That's a part of the market as well. But
And if I'm not mistaken, it's a pretty big part of the market.
no, it is.
Yeah.
It is. MBSs are a huge part of the market, right? So it is impacted in that, but that goes back to your diversification,
Sure.
because a lot of our clients, because we're risk managers.
Sure.
We had already gotten out of, and I hate to say this, Mark, but we'd already been advising our clients that crypto is not the way to go.
No, you're right.
Blockchain technology.
Damn it, where were you?
blockchain technology is huge.
Sure.
Right.
Sure.
And so it's the same thing we've been telling our clients now, right? Is that once we kind of had that shake up over the last couple of weeks, we've kind of started shifting to more of the defense positions, right? So things like utilities that can pass off, some of their prices, right? So like that's how you should be looking at, your investment from a market standpoint, right? Because you want to be, active, but of course no one's really, we're not beating the market all the time, right? But you still want to be tactical in your positions as it pertains to just recognizing how the market's flowing.
That makes great sense. And easily digestible conversion of what he just said, because that was very well said. The idea of, if you are trying to lock up a 30-year mortgage right now at 7%, 6.5%, that mortgage has to be purchased by an investor. That investor is intending to buy this note and receive 30 years worth of interest at X rate. But if there is a indicator that shows rates are going to be coming down soon, do you think you as an investor want to buy that higher interest rate loan mortgage-backed security that is going to probably yield you maybe 6 months to a year of interest versus 30? That's what's happening. And those of you out there locking in interest rates and being asked by your lenders to pay 1 to 2 discount points, that's also the reason, is they want to get some of the money up front as an investor, because they know damn well you're going to be refinancing this loan and paying off the current that they just purchased to get into a lower interest rate. It's just what we do when rates go up and down. But yeah, that's a great way to leverage the concept of what you do into our industry, and making sure that us professional experts in the mortgage side, we don't have to know what the market is doing in regards to the stocks, but we do need to know how real estate affects stocks.
Correlation. Yeah.
The correlation between the two. Yeah, absolutely. Gosh, there's so much more we can talk about when we are out of time, guys. Joseph, is there anything else you want to add to this? Because this has been, for me, an incredible discussion with two fine young men that I grew up with, that I'm very proud of, and being able to have intellectual conversations like this, man, that's deep.
Yeah, man. I just want to again just show my appreciation for just having the opportunity to come on here with you guys. It's again, to see the three of us from Parkwood doing what we're doing today, married with families. It's amazing. And I couldn't have imagined that this would have been my life today.
Yeah.
And my encouragement to everyone else is that it's never too late.
Yeah.
And you're able to create whatever you want. It just starts with you taking responsibility for everything that you're able to do.
On the money. Gosh, I couldn't have said it better. Preston, is there anything that you'd like to add to this?
I just want to say, if you didn't learn anything today, you weren't listening. You weren't, because I learned a ton today.
Absolutely. And with these discussions, because I'm a host, people believe that I know everything. I don't know shit, guys.
Hey, look, this guy does know a lot more than he's giving off now.
But I am a sponge when it comes to many of the topics that we go into. And I love being able to treat it like an infant so that I can soak it up. Because I'm not just the type that is going to take this and, all right, on to the next whatever in life. I'm now going to dive into this to learn more about it so that I then can articulate to my customers, I'm not the expert, but these are the facts. Here's what the logic is behind it. And okay, you can put the dots together for yourself. Type
Absolutely.
concept.
Again, we need to have a talk about your money management, okay?
Joe, get you a plug-in. Get you a plug-in.
That's right. Y'all remember, I'll end on this one here. Y'all remember Chappelle's show had Wu-Tang Financial?
Yep.
Oh, absolutely.
I want to drop that line on you. You got to diversify your bond.
That's awesome. Well, if anybody would like to get in touch with Joseph Milhouse, how would they get a hold of you, brother?
Man, just go ahead and reach out to me on any social media platform.
Very good.
I'm out there and I'm actively on that, and we can have a conversation.
There you go.
Yeah.
I really appreciate the company, the conversation, and the education that we just witnessed here.
Yeah.
I would like to have you on again so that we can talk some more, dive deeper into these rabbit holes, because the folks out there, these are not topics that come up in school. These aren't topics that you typically would see on social media. You have to go and find these things.
Correct.
But if we can continue putting it in the forefront and making it as cool as it just was, I think people will dive in and learn a little bit better.
Absolutely.
There we go.
Yeah.
Each one teach one, right?
Amen to that. So that being the case, guys, if you got anything out of this discussion, please make sure to like, subscribe, share with a friend. We are now up at 9,000 subscribers and growing. It still blows my mind as to, number one, how long it took. But now that we're here, we're not stopping. I will continue to bring you guys expert guests with the real goods. That being the case, thank you for continuing to tune in. And until the next one, catch you later.
Someone has already done and is already doing what you want to do. And no, they didn't fall into a rich family to do so. They were not born lucky. You know you can be more. You can have more, do more, and be more. You know this. You wouldn't be listening otherwise. Someone has already done and is already doing what you want to do. And no, they didn't fall into a rich family to do so. They were not born lucky. You know you can